What you just reminded me. Let's go ahead and record this thing. So you have a good question. Why off market?
Yes.
I think for the most part, when we think about off market deals, we're really just looking for a cheaper price.
Okay. Okay.
So at the end of the day, when we think about off market, is can we get a deal where it's cheaper than finding it in the MLS because you don't have to worry about paying real estate commissions and things like that. Even though sometimes you find awesome deals in the MLS, but the perception is that when you buy something off market, you're gonna get a better deal. You're dealing with a wholesaler. You're buying it at the flea market, so to speak. You know, so that's the whole point of off-market deals. Guys, we're gonna start in 3 minutes. Officially in 3 minutes. Wow, we have a whole bunch of people. 1, 2, 3, 4, 5, 6. Awesome. We say hi to Daniel. Daniel, thank you for joining us. Julian, thank you for joining us. Lilia, thank you for joining us. Jorge, thank you for joining us. Gonna give it a couple of more minutes and we're gonna get started. And today's topic is also good because a lot of people that are not in this business, they hear so much about private lenders, but they don't know who to believe. You know, because there's so many private lenders out there, so many people saying, "I could lend you up to 100%, no down payment." You see it all over the place, social media, all over. But at the end of the day, most of the time, I could tell you, if you don't know the person, you're gonna get burned. Because you're gonna put a contract, you're gonna believe in this person 100%, you're gonna go out there, put a contract, you know, all of a sudden the day of closing, the person can't deliver. So I think we're gonna be talking about, that's one of the reasons why people love the topic about private lending, understanding what are the pitfalls and how to maneuver through that process. So that's gonna be amazing. We're gonna be talking about that. And we're also gonna be talking about our off-market deals. In a couple of minutes, we're gonna be starting right at 12:05. I think. Guys, let's start by asking, can you guys hear me? Can you guys hear us? Can you put it on the chat? Yes, I hear you. Please, thank you.
Thank you, Julian.
All right, so we have another person. I'm gonna have to be the admin. What are you talking about? I have to add people, all these people here. All right, okay. 12:05, we're gonna start.
Perfect. We begin now.
Hello guys, this is Jorge Vazquez in Viral Doshi with Graystone Investment Group, where you invest.
We do the rest.
And we do the rest. Today we're gonna be talking about, we're gonna spend 30 minutes talking about 3 properties, 3 lending strategies. And per property, we're gonna talk about 3 compensating factors why these properties are amazing off-market properties. So let's get started. Why, you asked me a question earlier.
Yes.
Why most people are gravitated to buy off-market properties?
That's correct.
I think it's all about perception, right? Because people feel that off-market means savings. It's like when you buy something at the flea market or when you go to the dollar store, off-market means I'm not gonna pay the real estate commission. I'm gonna be able to get a good deal. Even though you and I, we've been in this business for 20 years, we know that there's actually good deals also in the MLS. But that's the perception. What do you think about that when you think about off-market?
I completely agree with you. It's largely about price. And there's a reason why. On the MLS, you've got thousands of agents looking at the property. And it creates a kind of a bidding war in that kind of a situation where there are so many people at it. It's like a virtual auction in a certain sense where the buyers will bid up the price of the property. So from a seller standpoint, the MLS is a great place to list their properties. Us, on the other hand, we are wholesalers. We are buying a ton of properties and providing them to our clients. So for our clients to buy off market with us gives a much better saving to them in terms of the price that they have to pay for the properties.
Absolutely, absolutely. And some of the challenges that come with off-market, buying off-market properties, you are typically 90% of the time going to get a better deal. But the biggest challenges are the timing. You got to run. Usually off-market deals require for you to close very fast. And that's what we're going to be giving you some lending options, private lending options. So we're going to be talking about the off-market properties we have. And we're going to be talking about some of the private lending options that we have. Make sure you guys put your phone in mute. Okay, awesome. Thank you so much. So let's jump and talk about some of the off-market properties.
Absolutely.
By the way, guys, we have about 30 minutes. You could stop us anytime, ask any questions. No question is a wrong question. It could be about this property. It could be about private lending in general. It could be about a specific, buying criteria. Doesn't matter. We're here for you. Okay. And by the way, for those of you that do not know us, we've been in business for almost 20 years. I've done at least 20 transactions in the past 20 years. I'm a broker.
2,000 transactions.
How many did I say?
20.
20.
We do 20 in a month.
So I've done about 2,000 transactions. I'm a broker of 40 agents. I've made every mistake that you could think of. And I'm here to hopefully with some of my testimonials help you avoid some of those pitfalls that happen in investing in off-market properties in private lending. Okay, so I'm gonna go ahead and share my screen. We're gonna go to the properties that we have. Okay, so even though you guys see 4 properties, we're only gonna discuss 3 because one of them is under contract.
Yes. One of them is already sold. So it's that one right there, which is Untitled Street in Ruskin. That particular deal is already under contract.
Okay, Bira, and that's what we have you here for. Tell us a little bit about each property, the compensating factors, why you like this property.
Okay, great. So let's go with one property at a time. Let's go with the first one first, which is 2818 on Anthony Street in Tampa. This is a duplex in Tampa. The property is by and large in good shape. It doesn't need like a ton of work or anything like that. I have not come across many properties in Tampa which are this economical and which are duplexes. Think about it. You are getting a property which is for a sale price of something close to $130,000, and it can produce an income of something close to $1,800 a month, probably even more than that. So in terms of the rent to value ratio, this is a really good property. The rehab on it is in the range of $15,000 to $20,000, depending on how far you want to go with the rehab. But the property is already rented now. The tenants are going to leave at the end of the month. So it's not like the property is in a disastrous shape where you have to absolutely put in every dollar that you have in order to rehab the property right now. It's not necessary. You can even phase it out over time and
we're going to show some of the pictures here. Those are some of the pictures.
Absolutely. So as you can tell, the property is by and large in decent shape. You can spend a little bit of money up front if you want for the rehab, and then you can spend the rest later if you like. That's about Anthony Street. In terms of the area is not bad. From a multifamily standpoint, it's a reasonably safe area, not an issue. It's not very far from the city. It's in a place where it's relatively easy to get tenants who will be able to pay. It's not hard for this particular property to get rented pretty quickly on Section 8 as well. So Section 8 is another advantage that we have because the government kind of guarantees the rent for you in a certain way. So that's another advantage with a duplex like this because it's so affordable. You're asking the tenant only to pay $900 a month per unit. It's a 2-1, and the neighboring unit is renting for $1,300. $1,300 bucks a month. The neighboring property.
Each unit.
Wow. Each unit is renting for that price. So in terms of the rent to value ratio, this is a.
So 3 things that you say why this deal is so good. Duplexes, guys, in Tampa, very hard to find in the low 100s. Very difficult.
Very.
Second, it has curb appeal because some of the duplexes that you see out there is a house and an in-law or something like that, which still works, but this is a true good-looking duplex.
Yes.
With good curb appeal. And third is because of the lending is available. in this type of property, you should be able to do any type of lending,
Absolutely.
right?
Absolutely.
Even conventional.
Conventional in the existing case will be a little hard.
But once it's rehab.
Oh, yes, absolutely. 100%. 100%.
All right, guys, we're going to stop. I know we have a couple of questions, and, you know, I don't have my assistant today, so I'm going to stop sharing and see if we have any questions here. Osvaldo says that he cannot hear us. Everybody else said that they could hear us. So we should be good to go. All right, guys, any questions on that duplex that I just presented to you guys? Any questions? 129, we do the lending, we'll lend you up to 80%. No questions asked. It comes with tenants already, right?
At the moment, the tenants are there in the property, but they're going to leave by the end of the month.
Okay, awesome, awesome. And what is your ideal strategy for that property?
The thing that I would like to do the most with the property, if I have the buyer on it, and this is a property which is a really good buy, is rehab the property and then rent it out. Because if you were to try to rent it out right now, yes, you could rent it. It's not hard to rent it, even in the existing scenario, but it would be harder to capture the full $900 in monthly rent. Okay. So if you don't mind a lower rent, then you can start renting it right now, build up the cash flow. And with the lending options that we have a few lending options which offer deferred payments, which means you could even build up the money over time and then use that money which you're saving from the cash flow, because you've got 0 monthly payments. Your lender's giving you the flexibility to pay later. You can use the rent from the property itself in order to rehab the property.
So what you say?
Possible of owner financing?
It's not owner financing, Daniel. It's a form of private lending where the lender is offering you deferred payments. So for example, just to give you a rough number, on $130,000, if you get a loan of, let's say $105,000, then on $105,000, you're not going to service the note. Although you have to make monthly payments and they are accruing, but you don't have to make them. You have to pay them towards the end of the loan term, which is going to be whatever option you choose. It could be short term, it could be as low as 7 months, it could be 1 year, it could be 2 years. So you have to pay all of that principal or interest only at that time. So you can use the cash flow from the rent in order to fund the money that you need for the rehab.
That answers your question, Daniel?
Yeah, the lending doesn't work for my clients.
I see. Okay.
There are a ton of lending options. 99% of conventional lending is not flexible.
Correct. Absolutely. So if you wanted to go conventional lending on this particular property, then the best way to do it would be to either buy cash, pay cash, buy the property, do the rehab, and then go ahead and opt for conventional lending. That would be the best way if you wanted to get conventional lending on this particular property.
Yeah.
It would not qualify for conventional lending in as-is condition. That much I can tell you right now. And that's the reason you're getting a better price on it.
All right, guys. Thank you for the question, Daniel. We're going to summarize property number 1. We don't want to run out of time. 130, 80% lending, no payments. So down, all you have to put down.
It's about 100. It's going to be in the range of $25,000.
So you put $25,000 down. We finance the rest. No questions asked. As long as you have a heartbeat, we'll get you approved. You don't have to worry about payments. We have a team that will help you afterwards, after 6 months. Once the seasoning is in place, we have a team that will find you the long-term lending. So we do everything for you. So this is deal number 1. We like it a lot. Low hundreds. It comes with tenants. You could fix it and remove the tenants, or leave it as is. So that's property number 1. We're going to move up property number 2. And we'll be answering all the questions later as well. If there's any additional questions. 19. Let's talk about 19. I think 19 is a good deal as well.
Oh, absolutely. Absolutely. No question about it. This is another property which is inside Tampa. It's a block home. It's a 3-1. It has an active tenant in the property right now. The tenant has not asked for any
like $1,300 a month.
Yes, he's paying $1,300 a month in rent. He's just renewed his lease.
I don't get it. I don't know why is he paying so much. I mean, I'm just being transparent. Why is he paying so much, man?
This is a long-term tenant. He's been there for a long time. And what had happened with the previous owner is he didn't have a property management team in place. So he didn't want any tenants to leave, and he told them whatever rehab comes, you have to do it for yourself. Now we've got the property and we have a property management team in place. So we told the tenant, Mr. Tenant, you don't have to deal with that kind of no hand holding anymore. We have a property management team which will help you with anything that needs to get done. So we told him that you have to now start paying the market rent, which is in the range of $1,300. And he signed the lease and he's made the first month
But that's
payment.
kind of crazy. $110,000. We're
Yes.
gonna lend you 80%. So that's only what, $23,000 down.
Yes.
You have a tenant that's paying $1,300 a month.
Yes, that's correct.
Wow. My concern, let's play I'm a skeptic investor.
Yes.
I'm gonna say that tenant's only gonna be there for a couple of months and leave.
No,
They're
the tenant
paying
is
too
going to be
much
there
money.
for the
do
tenant
you
is
think?
going to be there for 1 year. He
Okay.
signed the lease in June.
Oh wow. Wow.
So now he's going to be there for another 11 months. He's just paid the first month's rent.
All right, and when it comes to after repair value, what do we have here? I see some comps here at 202.
Yes.
What do you think the after repair value for this one?
In my understanding, the after repair value of this property is going to be in the range of 140, 135 to 140. That will
Okay.
be probably the range in which this after repair value will come up.
So that's pretty conservative.
Yeah.
So now long term, what will be the solution for somebody after 6 months? They only put 20% down, no payments for 6 months. What happens then?
At the end of 6 months?
Yes.
At the end of 6 months, they've got something in the range of $9,000 to $10,000 already in cash flow because they're not making any monthly payments,
That makes sense.
right? And the property needs a bit of work, but it's not the kind of work that is going to mess things up. It's just that the tenant is happy with the property the way it is. So I would just let it keep cash flowing until you have to do something about
And
it.
this property is available right now. If
Yes.
somebody wants to make an offer, what do they need? $1,000 down? or
That's
what?
it. That's it.
Awesome. And how much time do they need to close?
Something in the range of 2.5 weeks.
All right, and let me show you the house on the inside. The conditions look pretty good.
Yeah.
The tenant is a little messy on the outside.
Yes.
I've seen some
Yes.
of the pictures.
Yes.
Guys, second property available, 80% financing available. We'll help you. Our team will help you after 6 months to find a long-term type of term. A no-brainer. The tenant is paying $1,300 a month. No doubt the property is going to need repairs, but as long as, don't fix something that is not broken.
Exactly.
So I will leave it like that. Any questions, guys, on property number 2? Okay, Julian has a question here.
Can you explain the 6 months no payment?
You kind of answered that already,
Yes,
but
yes.
answer it again if you.
So I'll tell you what it means. So let's just take a very simple example. Let's say that you were getting a loan of $100,000. Then you have to make a monthly payment of, let's say, $900 a month. For 6 months, that $5,400 which is accruing, you don't have to make that payment. You will have to make that payment when you do the refinance, depending on when you do the refinance. So let's say it's a 12-month term. That entire interest which is due is what you have to pay at the end of 12 months, along with the remaining principal. So this is what is going to get taken care of by your refinance.
And guys, we are one of the few only companies doing this, where you buy something, you only put 20% down, and you don't have to make payments for 6 months. 6 months. So that allows you to, let's say that you're very short in cash for repairs. Let's say that you're very short in cash for reserves. This allows you to catch up, start collecting the tenant's payment for 6 months, and utilize some of those funds to fix the property.
Absolutely.
So it gives you a lot of options. And actually, those type of loans for 6 months are also renewable. So you can renew them for another point for another 6 months. It's not the ideal scenario, but if you have to do it, it's all about having options.
Correct.
Okay.
Julian is asking, what is the interest rate?
What is the interest
So
rate?
the interest rate, there are 3 options. It starts at 10%. It goes up to 12.5%. That's where it is. It depends on the term that you want.
And at the end of the day, don't get caught up on the interest rate, right? You're only paying 6 months of it. It's not like you're going to be 10 years into it, 15 years into it. When it comes to bridge lending, this is what I want you guys to understand. The interest rate is the least concern. It's the thing that you have to worry the least. Everything else is how much can you get, how much time, payments. The interest rate, whether it's 10%, 9%, 8%, is going to be so minimal. That's not really going to affect your plan,
Absolutely.
your exit out.
And the reason why it doesn't matter as much, because everyone is very concerned about the interest rate. This is an interest-only loan. It's not an amortized loan. If you were to look at what your monthly payment will be, if it were an amortized loan, it would be higher. In this particular case, it's an interest only loan, which means your monthly payment, even though you're not making it, that monthly payment is lower.
Right, exactly.
So the interest rate is not the fact that it's you're not comparing apples to apples if you're comparing amortized with interest only.
Absolutely. So any other questions? No payments for up to 6 months. You can renew for another 6 months. 80% financing. No questions asked. Asset-based, totally asset-based. Doesn't get any better than that, guys. And what we're talking about are properties just about 100.
Yeah.
Somebody wanting to start, these are the perfect properties, and these two are available.
That's right.
Ormelda is under contract.
That's correct.
We could talk about it very quick if you want.
Yes, sure thing.
Just so they know, this property we had it for sale, and right away we got a buyer for it. But
That's
you could
correct.
talk about it, why the investor loved this property so much.
Oh,
and why it's
absolutely.
sold.
Absolutely. So this is a 2-bedroom, 1-bathroom property in Ruskin. The property barely needs any work. There is a tenant in the property who's going to leave at the end of the month. We have a formal appraisal on the property at $153,000. And this particular property is a good fit for every exit that you want. It's a very good fit for a corporate rental because we have a corporate relationship with a company there which wants to rent this particular property for its executives. This is a very good fit for a lease option. And it's a very good fit for a long-term rental as well. So whichever option you want to look at, this particular property fits the bill.
Briefly talk about corporate rental, since you already mentioned it. It's not fair that you.
I'm sorry.
Just very quick, what is a corporate rental?
A corporate rental is, think of it like a long-term Airbnb, which is going to take 3 months, 6 months, where it's a company which is renting the property for its employees. And because the company is paying the rent, they are willing to pay a much higher than market rent. This is what it basically is.
Got it. Guys, the cool thing about working with us is that we've been doing this for so long. There's about 50 of us working here, including the agents. We have one of the brightest minds working on different strategies that we could teach you how to, every property you buy, we're gonna show you multiple exit strategies, multiple strategies as a rental property, whether it's as a lease option, corporate rental, Airbnb, sandwich lease, whatever you could think of, we've done it. We failed on it, learn how to do it the right way. So you have a really good team that knows how to do that. So in this case, this property is better. That's why you see the rent so high. It's because it could potentially be a good corporate rental.
Absolutely.
Typically it's 2-3 times higher than the actual rent.
That's correct.
Any questions, guys, that you might have? Let's see any questions here. Any estimated repairs after the lease is done?
For which property is that? Is that for North 19th Street? If it's for North 19th Street, the rent has already been fixed for 1 full year. So even if you were to do the repairs, the rent would not increase for the full 1 year. But the point is you don't have to do the repairs for the full 1 year because it's already renting at 30
exactly.
right now.
Once again, like I said, if it's not broken, don't fix it. Of course, if the way that I would do it, it will be a little bit at a time. If one tenant leaves or one tenant calls about some sort of work order, then instead of fixing it, can you replace it? And little by little, put the place to par. That makes sense?
Absolutely. That is exactly the way to do it.
All right, guys, we're going to discuss the last property that we have available here. Let's go back. And hopefully, oh, no, I went too far back. All right, Jean Street. Let's talk about Jean Street.
Okay.
Man, I'm surprised it's still available because when we first put it in the market, there was like 100 people.
Yeah.
And then what happened with the probate thing, kind of like delay things.
Correct.
Tell us about the property and what do you think the top 3 compensating factors for people to really buy this property?
Correct. So we can tell you what we need to do on it. Just leave that.
Okay, it's asking us to update this thing. All right. So go ahead real quick so we could not miss it.
The purchase price is in the range of $160,000. Now, when a person looks at $160,000 and see, okay, it's a 3-1 in Tampa. Okay, why is this a good deal? The answer is because it has 2 units. It's got a detached unit in the back of the house, which is another 425 square feet. If you check out the property appraiser's website, it comes up as heated space right now, which means the gross square footage of the house is 1220 for the main unit and 425 for the back unit. So it's 2 separate units. We had our GC walk the property personally and give us a detailed rehab estimate on what it would cost to convert that back unit into a mother-in-law efficiency 1-1 kind of a unit.
To make it a duplex.
Exactly. In terms of cash flow, it's a duplex. And in terms of appraisal, it's a single family. We've got a formal appraisal on this particular property at $262,000.
262, wow,
Yes.
an actual appraisal. And the pictures on the inside, they look pretty good.
The property from the inside is not bad at all. The bulk of the cost is towards converting that back unit into a 1-1 and changing the roof. But in terms of the inside of the property, it's in decent shape. It's not in terrible shape or anything.
So we haven't talked about the BRRRR strategy. We could talk about it a little bit very quick.
Absolutely.
So to summarize what you have said so far, the property, we do have an appraisal from a third-party appraisal that the property is worth 262. And the repairs are in the range of anywhere from 30 to 40,000, depending what you want to do with the property.
Correct.
So even if, let's say it's 40, you still have a good $60,000 in equity.
That's correct.
What that means is that you have enough spread to maybe refinance and pull most of your money out.
Absolutely.
And that is what the BRRRR strategy means. Tell us very quick about the BRRRR strategy. We're running out of time, but very quick.
It's buy, rehab, rent, refinance, repeat. That's basically what a BRRRR strategy is. If you were to get 75% loan to value on the refinanced value, so you buy it for 160, we'll get you hard money financing or private money financing for you to buy the property upfront. You rehab the property. At the end of 3 months, 4 months, you go to the bank and say, okay, the property is worth 262 years of formal appraisal. I want 75% loan to value. How much of your money is going to be left in the property at that point? Zero. Because your loan to value is going to be in the range of, at 75%, it's in the range of $202,000. Which means every single penny that you put in the property will almost come back out to you. Which means now you just have to service a note on $200,000. Depending on what your rate of interest would be, it would be in the range of $1,500. Your gross rent is $2,000, which means you're cash flowing positively for the rest of your life. It's an infinite cash on cash return.
Guys, and I've seen this happen before, believe it or not. I've seen clients that go with $25,000 only. They buy their first property, they cash out. If you do it the right way, you have to be, this is very surgical. You really have to have the right team. You cannot go over repairs. You cannot go over the sales price. You got to make sure you have validation on the after repair value as a form of an appraisal. All of these things have to be in place because if you want to make sure that you pull most of your money out, you got to make sure that the numbers are done correctly. But if you do this correctly, guys, literally, you could just, with the same $25,000, $30,000, you could do rinse and repeat and potentially buy 4 or 5 homes within a few years. It's easier said than done, right?
Absolutely.
But if you have the team to do it like us, we could definitely do that. We've done it for other clients before where we'll buy, rinse and repeat with the same 30. They bought a second property, third property, fourth property. And I want to end with what type of lending products we have right now. We have talk about the bridge in general, and then talk about long-term in general, very quick. So they know the different options.
Okay. So the bridge lending is a particular option which very few companies out there have, especially with the kind of deferred program that we're offering. I don't know any company which is offering that kind of a deferred program. This is true asset-backed lending. It's not backed by your FICO score, by your debt-to-income ratio. It's not connected with any of that. It's just connected with the value of the property. The loan-to-value will be in the range of 80% of the purchase price. So you just have to come up with 20% down, and there will be no payments on it. The interest rate will be in the range of 10 to 12%, broadly speaking. The points will be in the range of 1 to 3 points, approximately. And the qualification is pretty quick. The whole deal can close from start to finish in a week and a half, easy. So this is a product which is used mainly to acquire properties, because when you're getting the properties at such a steep discount, you're getting a very good price. What you're giving is the fact that you have to buy the property quickly. So this is a product mainly designed for acquisition. After that, in terms of a long-term product, at the end of 3 months, 6 months, once your title seasoning is all in place, you can migrate to a long-term product, which is a fixed rate, 30-year loan. And the interest rates for that start at 6%, go to 8%. Usually it falls in the 7.5%.
These are private as well.
Yes, these are also private. These are also asset-backed. These are completely asset-backed loans. They're not directly tied to your credit. It's not going to come up on your credit report in that sense.
Actually, you got that question asked today. And also for foreign nationals, there's some options for foreign nationals as well. So all we're talking about today is easy money, easy lending, private lending, okay? So to summarize everything, within the examples that we gave you guys today, you could bring as little as $25,000, $30,000 buy your first property, fix it a little bit, rinse and repeat. We'll meet again 6 months from now. You buy the second property. You could have bought 2 properties within the next 12 months if you really wanted to. And then continue doing the rinse and repeat process. Guys, we have about 4 minutes before we get disconnected. Any questions? I'm gonna open up the floor for anyone that wants to ask any last minute questions.
I'm seeing Carlos is asking us a question. Do we have duplexes in Newport Richey? At this point in time, we don't have a duplex in Newport Richey. The duplex that we have is right now in Tampa.
But we do get some.
Oh yes, absolutely. Absolutely.
So I'm gonna, since if I don't get a lot of participation, I'm like that. I'll start calling people. Carlos, any questions? Dale, any questions? Or just wanna say hi? Doesn't matter. Fire tablet. I don't know.
Okay, Rhonda is asking us a question. I've never done this, but can you explain? Can somebody reach out to me?
Okay. Yes, we could definitely reach out to you after the call. This is my number, 813-679-6177, 813-679-6177. I'm the president of the company. Call me anytime. I've done at least 2,000 transactions. I've done every transaction that you could think of. And if we can make it happen, we'll make it happen. Thank you, Lisa, for posting it there.
for posting it there.
Any other questions? Julian, Rhonda, any questions? Fire Tablet. What is your name, Fire Tablet? Thank you, appreciate it. We still have 2 minutes. So the last thing I want to say, thank you for your time, Biral.
Absolutely.
Biral, he's an amazing person, asset to the company, super knowledgeable. Between him and I, probably like 30 years of experience. We're here for you.
Yes, we've just got a question. Are agents able to use this funding? So the answer is yes, absolutely. If you're an agent, you can use this funding. You definitely can. This is, I'd like to take this last 1 minute in order to just throw open the floor to this. So many agents are involved in real estate, but most agents are not investors themselves.
We're starting to some of them. So what we're gonna say is we usually ask, this is the action from today. We usually ask $5,000 for property. Anybody that was here could hold it with $1,000 only. So if you're interested in any other properties, let us know $1,000.
Absolutely.
But Biral is right. We're running out of time. If you're an agent, become an investor as well, might as well.
Absolutely.
Thank you guys. Once again, this is Jorge Vazquez with Graystone Investment Group, where you invest and we do the rest. Let us know if you enjoy this, because if you like it, we're gonna start doing it weekly, right?
Absolutely. We can do it weekly.
Thank you for the time. I appreciate it, guys. Thank you. And we have a Glenn that just joined us, but we're on our way out. Glenn will be providing the video. We're done with the session today. Thank you for joining us. Appreciate it.